Hi, there are additional risk factors to be considered when you engage in international trade. In this video, we will cover these and set out how you can reduce and manage these risks. Of course, these are in addition to the legal and tax issues that Nick covered in his video, Legal and Tax Considerations. So to begin this process, on the next slide, we'll look at exactly what these additional risks are. The first risk you should consider is country risk. When selling to another country, you run the risk relative to that country, otherwise known as political risk. Political upheavals can cause dramatic changes, including shifts in economic policy, nationalization, expropriations, loss of personal rights, and physical danger. Political strife can prompt foreign reactions in the form of economic sanctions, boycotts, and embargoes. Therefore, as we described in the video Connecting Buyers and Suppliers, it is important for you to compile lists of countries with which you are prepared to trade and those you are not. Your buyer may well want to make payment or honor the contract with you, but is not able to because of their country's political or financial position. To help you make these decisions, check the country profile in the Exporter's Almanac. The link is shown below in the description of this video. The country trade profiles indicate whether a country is subject to sanctions and provides credit ratings and indicators relating to the ease of doing business, as well as the Corruption Perceptions Index. Of course, a country's status can adversely change during the life of a contract, negatively impacting that contract. To cover this risk, it is possible to take out country political risk insurance cover. The next risk to consider is whether you are taking a credit risk on your foreign client. If so, then you should request a credit reference. The Exporter's Almanac lists international credit rating agencies in the Support Services section. If for any reason you cannot get a credit reference or you receive a bad report, then you should say that your payment terms are cash in advance, or as an alternative, you can take out credit insurance. The next risk to consider is identity. Just like in the physical world, you need to be sure who you are dealing with. There are two considerations here: the identity of the company and the identity of the individual representing the company. Whether in the digital or physical world, you should carry out the same level of due diligence regarding both sets of identity. We would also say that this is equally true for domestic as well as international trade. Company identity. There are potentially 5 sources for checking a company's identity. For most countries, you can check their registration details online in the official company register. Check out the trade profile of the country in the Exporter's Almanac. If the official company registration is online, you will find the link there. You can also check their entry in Compass for further details, if it is registered with Compass. The link to Compass is also shown in the description below. As we have already suggested, you can request a credit report. For EU-based buyers, you should also check their VAT and EORI numbers, which you will need in any case for commercial and customs documentation. These are available from the EU's website. Again, the link is shown below on the description. Does the company's website match the details from all these information sources? Are you in fact dealing with the company's real website? Please note that fraudsters are very capable of producing credible false credentials. The more sources you can cross-check, the better. Okay, assuming that you are happy with the identity of the company, are you in fact dealing with a legal representative of that company? Personal identity. Check the identity of the contact person. Do they in fact represent the company you are dealing with? Are they a director? Are they listed on the company's website? Can they be reached via the company's switchboard? Do they have a company email address? Is their LinkedIn profile validated? Are you sure that you are not dealing with an avatar? Let's now assume that you are reasonably confident regarding the identities of the company and their representatives. Unless you have had a good trading history with the company, you should consider taking out trade credit insurance. Insurance is an important and sometimes a necessary element in protecting your company. To help you manage these costs, we would suggest that you take a few minutes to get some competitive quotes for trade credit insurance, covering any credit you may extend. These can be offered by private insurance companies and government agencies. See Support Services Insurance section in the Exporters Almanac, Intellectual Property, IP, Considerations. In addition to taking normal precautions about releasing confidential information to third parties, you should also make signing non-disclosure agreements, NDAs, a standard operating procedure when exchanging confidential information with third parties. They are legally binding and cover all parties' confidential information and set out what should be done with this information at the end of any relationship. Clearly label any copyright material with your company name and the date before you distribute or share it with any third party. Review whether your trademarks, designs, and patents are covered in any new territories you are to trade in. Carry out a trademark search online with the World Intellectual Property Organization to see if something similar to your brand already exists there. The link to this service is provided in the description below. Consider the value of obtaining a patent or trademark against the costs involved as part of your export plan. If you are considering registering a patent or a trademark abroad, check with your professional trade attorney, the one who registered your trademark or patent in your own country. However, there are countries where it is extremely difficult and expensive to enforce confidentiality agreements and intellectual property rights. We would suggest that if you have any doubts, you should check with your Chamber of Commerce or relevant government department. Foreign exchange risks. If you have foreign exchange denominated contracts, you have exposure to changes in the exchange rate. Getting the best possible exchange rates and speed of payment gives a direct benefit to your bottom line and cash flow. Even if you think that your FX provider is giving you the best deal, why not check this out with other FX providers? There are a number of these listed in the Exporters Almanac. See the Support Services, International Banks and Finance section. In international trade, unless countries share a currency, as in the EU, at least one of the parties has to factor in the foreign exchange exposure. One of you will be receiving or paying in foreign currency, and this represents a risk which can be covered at a cost which in turn should be factored into the price. There are of course scenarios where both supplier and buyer take a risk by denominating contracts in a currency which is foreign to both of them. However, this can work out to be the cheapest option. For example, in the case of US dollars, it is easier for each party to hedge the USD risk rather than directly in currencies which are rarely traded directly, for example, Uzbekistan Som and Cape Verde Escudos. The main options open to hedge exchange rates are forward contracts. This is where a company agrees with its bank to buy or sell a certain amount of foreign exchange at a fixed price on a fixed date. Problems can arise if the foreign currency is not bought or sold on that date. Forward options. This is where the buyer or the seller has the option, but not the obligation, to buy or sell a certain amount of foreign exchange at a fixed rate. A final point for consideration: non-delivery of goods, or the goods are damaged in transit. This can happen through no fault of the buyer or the supplier. The important thing is that shipping risks are covered by insurance. You just have to agree who pays for it. We've covered a lot on this slide, so we think it may help to use the next slide to summarize the key points. We discussed a number of risks, all of which can be reduced by carefully checking the status of your counterparty. However, it is vital that you take out adequate insurance to cover political risk. If for any reason the country of your counterparty does not allow or cannot make payment, you get paid. Trade credit. If your counterparty cannot or does not make payment, you still get paid. Shipping risks. If your goods are not delivered or are damaged in transit, you still get paid. If there is a foreign exchange risk, you can consider a forward contract or option with your bank. This means that you are sure what you have to pay or receive in your currency. Another consideration to be taken into account here is that insurance does not always cover 100% of your claim. Therefore, you should make sure that in your price that any reduced amount you may receive will cover all your costs. We thought a final few comments on price and payment terms would close off the discussion on risk reduction and management. Let's have a look at these on the next slide. Price and payment terms. Clarity on price, who pays for what, and payment terms, who pays when and how. These points are fundamental to bringing clarity to commercial relations. The Incoterms price agreed in international contracts determines who pays for what. Please see below in the description for a link to more details relating to Incoterms. The three most common pricing terms are FOB, or free on board. This means that the seller has to deliver the goods to the shipping company. All additional costs are then paid by the buyer. C and F, or cost and freight. Here the seller has to pay for the shipment to a specified delivery point. C, I, F, or cost, insurance, and freight. Here the seller has to pay for the shipment to a specified delivery point and for the shipping insurance. In these three cases, the seller does not have to pay for any tariffs imposed by the importing country. These are for the buyer's account. The payment terms agreed in a commercial contract will reflect the risks run by both supplier and buyer. There are four primary payment terms used in international trade: advance payment, cash. This presents the least risk to the exporter. Letters of credit. With these, a bank will guarantee payment, documentary collections. These mean that the buyer cannot get the goods until payment is made, but the banks involved do not guarantee that payment will be made. Open account. Here you have to completely trust the buyer to make payment. You should note, however, that in exporting, advance payment is rare. Foreign buyers generally will only pay fully upfront for smaller shipments, although they might agree to a partial down payment if it is the only way to get the goods. Importers usually insist on payment upon delivery, or preferably sometime after delivery. Therefore, you are likely to push for a letter of credit or documentary collection. Warning: there are fraudsters about. Be careful about moving from advance payments and/or letters of credit to an open account system. If you do feel that you have to accept an open account agreement, then, as suggested, you should consider taking out trade credit insurance. Well, that's it. We hope that this video helps to clarify the risks that exist in international trade and that you can see a clear way to reduce and manage them. Thanks for watching. If you would like to contact me directly, please feel free to do so. Our website and my email address are on this slide and in the description below. If you found this video helpful, please give it a like and subscribe to our channel for more insights on growing your international trade potential. Just click the subscribe link on the screen. It doesn't cost anything. If you think anyone you know would be interested, please share this link with them. And if you're ready for the next step, check out the next video in the playlist. It's linked right here.